All right, so we'll jump in here today. Those of you who have questions, I'll do the best I can to answer them as we go. But if I do miss them, you can always email me, ross@warriortrading.com. So it looks like we've got an awesome turnout here, which is really cool, the last big event of the 2016 calendar year. So thanks everyone for being here, and Renee for inviting us to present. So this is going to be kind of a Cliff Notes version of some of the webinars that we offer over at Warrior Trading. I'm going to walk you through 3 of the most important concepts that you need to understand in order to be a profitable day trader. As you guys probably know, I am a full-time trader, and you can see a picture of me there. I founded Warrior Trading in 2012 to be a hub where traders could come to connect and exchange ideas. And then once I began to trade profitably, I started teaching our day trading course. I first taught it in 2014, and my mission really was to help beginner traders avoid going through the same struggles that I went through when I was getting started. In 2015, I took a break from teaching to write a book that's become a bestseller. It's titled How to Day Trade, and you can find it on Amazon, Barnes & Noble, and hundreds of other booksellers. For folks that attend the webinars at Warrior Trading, I give a free copy of that book. All right, now over the years, I've worked with literally thousands of students, teaching them the strategies that I use every single day to make a living from the market. And over at Warrior Trading, we're home now to nearly 3,000 premium traders. As you can see here, we've worked with a lot of different companies in the fintech space. My writing has been featured on the Huffington Post, Seeking Alpha, MarketWatch, Investing.com. We work closely with eSignal and Benzinga. You can see here in 2016 we were nominated for a Benzinga FinTech Award for Best Educator. I'm also really active on social media and on YouTube. We've got 1.5 million views on our most popular video. We've got over 460,000 followers on social media. All right, so you guys, if you enjoyed this webinar, you can certainly follow us either on Twitter, Facebook, Instagram, or YouTube. Now, you guys have probably seen a lot of educators in this industry, and some of them will promise that you'll make $1 million day trading. Right? A lot of educators make big promises. They show you pictures of them standing next to fancy cars or on private jets and stuff like that. And a lot of those, are promises that they can't keep. I don't try to sell the lifestyle of the top 1%. I don't like being a salesman. I don't like doing that kind of thing. Even though I'm sure driving a sports car and traveling around the world is fun, I realize that that's not why most of you guys are here. Most of you guys are here because you genuinely want to learn how to trade or how to be better traders. And the reason you want to trade is most likely so you can achieve some level of financial freedom. So that's why we focus on really providing the skills and the training to offer financial freedom to the students who come into our classes and come into our chat room dedicated, disciplined, and driven. In reality, financial freedom can come from simply making an extra $200 a day, because after all, $200 a day is $50,000 a year. And because we focus on this simple strategy, we've become very popular. We're in the top 10 out of over 75,000 products here, and we've got students logging in from all over the world to our chat room every single day. You can see this map here. This is a day, 2,000 attendees, and you can see logging in from everywhere. We've got students logging in at 3:30 in the afternoon in Paris for the New York City market open. So we are a global trading community, which is pretty cool. So now that you know a little bit about me, let's go over the agenda for today. I'm going to show you how to manage risk, how to choose hot stocks, and how to find entries. Pretty simple, right? Those are the 3 things that we're going to talk about. And these 3 secrets for trading success, you can implement these today to become a better trader. This webinar is actually unique in that these 3 secrets, they actually come directly from our trading courses. Although the classes are over 20 chapters of content, I took 3 of the most important concepts, and I'm going to give you the Cliff Notes version today. All right, so my promise to all of you in attendance is that whether you're a beginner trader or you're an experienced trader, if you watch this entire presentation, you will get some sort of value that you can apply to your trading right now to help you produce better results. And before we go into them, I want you to realize that everything that I'm going to talk about today, I had to learn the hard way. It took me 18 months of struggling and over $100,000 in losses between trading and cost of living before I found any success at all. The market does not give up profits easily, and many of you guys probably already realize that. When I was a beginner trader, I started with modest goals of $100 a day, $200 a day, and I had no idea that those skills that I was learning would someday lead to me making over $10,000 on a good day, or over $200,000 this year in 2016. Now, with $200,000 in day trading profits, I'll be in the top 5% income bracket, and I'm only trading 2 hours a day. So for students that are working with me, even if they only obtain a fraction of that, they will still have financial freedom, and they'll be able to be making a living working from home, which I think is really the goal that many of us have set. All right, so I'm going to talk a little bit about my experiences, and we'll get started here. Now, you all understand the basic concepts of trading. We're looking for stocks that are volatile. We're looking for stocks that have the potential to make big moves. All right, so make sure you've got a notepad and a pen. I'm going to go through these slides pretty quickly. All right, now for me, having worked with thousands of students over the years, I can tell you without a doubt that an inability to manage risk is the leading cause of failure among beginner traders. All right, so if you realize, and you probably do at this point, that 90% of traders will fail to make money, you have to understand what they're doing wrong, right? You need to take a different approach. You need to do something different from what 90% of the traders out there are doing. It's really important for us to dig into the causes of failure so we can avoid those common mistakes, right? And I really believe that an inability to manage risk is the leading cause of failure. And the thing is, you can choose to manage risk. You can choose to get education. You can choose to understand the difference between a well-balanced trade and a high-risk trade. So when you make the choice not to manage risk and not to get educated, you're essentially choosing to fail as a trader. A lot of traders, I found sort of two groups of traders that come through our classes. The first group, they're really dedicated. They want to learn all this stuff, and they understand they've got to pay their dues, they've got to study and practice. And then the other group, they're eager, they're impatient, they're overconfident, and they start trading before they're ready, and those are the ones that statistically are going to lose money. All right, now the fact that all of you guys signed up for this event and you showed up, that shows me that you guys, you're doing something different than the majority of beginner traders who think they can just beat the market, on their own. You guys recognize the value of education. So that by itself, hopefully is going to put you several steps ahead of most traders out there. Now, when you're taking trades, every single trade you take has a profit-loss ratio, whether you know it or not. All right? So you need to learn to understand your metrics and your statistics. You can see right here on this breakdown, if you risk $50 to make $1, right? That's not very good risk. That's not smart. You'd have to be right 98% of the time if you took 100 trades with this type of risk in order to break even. Now, on the other hand, if you risk, let's say $1 to make $5, well, those odds are pretty good, right? That's not bad. You'd actually only have to be right 17% of the time to break even. I aim for myself and for my students a 2-to-1 profit-loss ratio, meaning you risk 100 to make 200, with accuracy of about 60%. This metric right here defines success. If you can fall in this area, you'll be profitable. Now, that's one of the things that every trader needs to do. They need to understand their metrics. They need to know currently, right now, what you're trading at. What's your accuracy and what are your profit-loss ratios? So if you don't know that, those of you who have worked with me in the past, you guys can send me your Excel docs and I can look at them and I can tell you what your accuracy is and I can tell you what your profit-loss ratio is. I can break down those numbers for you and help you understand, where you are, if you're on, the wrong side of profiting or the right side. As you increase your profit-loss ratio, the required percentage of success to break even goes down. And that means you can essentially, make the bar really low. You can set the bar really low so it's easy to succeed and be profitable. And that's always, a really good thing. One of the things you'll realize is that sometimes the best trade is no trade at all. All right? If you can't manage your risk on a trade, you shouldn't be taking it. This took me a long time to learn. For a long time, I would overtrade. I was a kind of habitual overtrader. I would just trade and trade and trade. And then I realized that I do a lot better when I just focus on the best quality setups. And that means slowing down and really evaluating every trade before I take it. And sometimes the best trade is no trade at all, and the best position is to be in cash. Now you can see here, this is a screenshot of two days of trading. On the left, I've got a green day, $5,700 profit, trading 5 different stocks and green on all 5 of them. This is a day where my accuracy was just fantastic, right? I was just having a really great day. And this is the type of day that it's important to know that you're on a little bit of a hot streak and you want to really capitalize on this opportunity. Maybe the market is really, really strong, right? Maybe you're just really in the zone. Well, this is the time to amp up the risk, put the pedal to the metal, and try to make as much as you can, because you know inevitably you're going to have a cold streak or you're going to have a red day. And then on the red day, instead of putting the pedal to the metal and being aggressive when trading is going badly, you want to ease up on the risk. You want to sort of taper back on your share size, and that's how you minimize your losses and maximize your winners. Being able to throttle your risk based on the type of day you're having or the type of market we're seeing or the type of month we're having is really important. Now, I also want to take a moment to point out the fact that I'm doing something here which is very rare. I'm showing you that I've lost before. A lot of traders, they never show you their losses. They only show you their winners. And that gives you a really distorted perspective of what it's like to be a trader. Every trader, even the best traders, sometimes lose. And there's nothing wrong with losing. If you push yourself and you really are working at the edge of your comfort zone, whether it's you're a race car driver or you're a downhill skier, there are going to be times where you have accidents, you crash, you fall, whatever, you lose. There's nothing wrong with losing. You have to lose in a safe and controlled way. And I'm really transparent about showing you my losses because I think you guys probably can learn more from my red days and my red day recaps than you can from my green days. This is a day where everything was working even if I wasn't following all the rules. This is a day where the market came out on top, and so being able to compare these 2 days and understand both sides of the coin is really important for all traders. All right, so 3 things you can do, and you should write these down, to help you get better at managing risk. Number 1, only allow yourself to take 5 trades a day. Might seem crazy, but by capping the number of trades you take, invariably you're going to be focusing on the best and you're going to leave the rest. Trade the best and leave the rest. Number 2, only take trades when you've got the realistic potential to double your risk in profit. So that means if you're going to risk $100, it's because you have the potential to make $200. Number 3, only take A-quality setups and focus on 5-minute setups especially. As a day trader, I trade the 5-minute time frame, and I'll show you some charts in a few minutes so you can see what I'm looking at. But you want to be able to print out your chart, of all the stocks you traded at the end of the day, and tomorrow or a week later, look at that chart and be like, yep, that was a good setup. That was worth, it was worth taking that trade. That made sense. A lot of traders, a lot of my students, they'll send me charts of stocks they traded, and I'm looking at them thinking, I can't see the entry. I'm not sure what they were looking at. And it turns out they were looking at, a micro time frame, like, the 1-minute chart or the 30-second chart, or they were looking at just the level 2 and they jumped in it. You really need to make sure you're focusing on, the big picture, and so that means stepping back, looking at the 5-minute and looking at the daily chart as well. Now, as I said, when I was learning to trade, I went through, a very long, drawn-out process of struggling. It was about 18 months, and I lost $30,000 in trading losses, and then another $70,000 in living expenses during that time. And I was really frustrated. I wanted to be a successful trader, like I think so many of you who are here today, probably also want, and I just wasn't finding success. Now, finally, at the end of all of that, I discovered a pattern in the market, and that pattern was that almost every single day there's a stock that moves 20 to 30%. Today we have stocks moving 80%, 90%, almost 100%, the shipping stocks, right? The trick is learning how to find and identify these setups before they make the big move. So trying to see if there's some indicator that will help tip me off to these setups, and there are. And this became the basis for my momentum trading strategy that I'm still trading today. So I've been able to refine this strategy, and now in my best months make nearly $35,000, which is, coming from Vermont, it's a lot of money. Now, when I was learning to trade, I was fortunate enough to have a relatively large account. I had a $25,000, $26,000 trading account, and I never had the the experience of trying to trade on a really small account, like a $1,000 or $2,000 trading account, even though more than half of our students are trading with accounts smaller than $5,000. So recently I decided to fund a $1,000 trading account. to test my strategy, to see if I could apply these same techniques to a really small account. And the result is that I took a $1,000 balance and turned it into $8,653 at the end of 1 month. Now, it was actually a 1,000% gain from the bottom to the top, because on the first 2 days I lost 25% of my account. You can see here, those were the 2 red days, and then off those lows, I surged up, had a couple of really strong days, over $1,000, and quickly made a really nice profit. Now, I exported all of these trades and made these reports so you guys could see really the metrics behind the trades. All right, we talked about metrics just a minute ago. So my percentage of success, it was 65%. 65% accuracy, that's not bad, but leaves room for improvement. But what's the other side of the coin? You've got your accuracy, and then you've got your profit-loss ratio. My profit-loss ratio was 3 to 1. My average winners were $214, and my average losers were only 70. So I had a 3 to 1 profit-loss ratio. That meant anything above 25% accuracy was break even. Anything above that was profit. Right? I set the bar low, and I was able to, in 1 month, make over 750% profit on that account. So again, through this challenge that I did, I exported all of my trades, and I provided broker statements to show everyone that this is a real strategy. These are real trades, and I am a real trader. Now, I also work closely with all of our students, and my focus is trading in the morning and teaching in the afternoons. Now, extended over 12 months, that would have been about $91,000 in profit from a $1,000 starting balance. So is it possible to trade with a really small account? The answer is yes, absolutely. Is it possible to take $1,000 and turn it into $100,000? I really think it is. Now, at the end of that month, I went back to trading in my regular size account, which is why I'm up about $210,000 on the year right now. But in any case, I think that this shows the potential for trading with a small account, which a lot of our students have. Now, when it comes to stock selection, this is really important. A lot of traders don't know how to choose the right types of stocks to trade. And that's understandable, because there are literally thousands of stocks that you could trade on any given day. So how do you find ones that actually have home run potential, right? Or the ones that have the potential to move 20 to 30% intraday? All right. What I did is I looked at all the stocks that were making those big moves, and I analyzed them. I just broke them down. I put them in spreadsheets, and I tried to figure out, what are the common denominators that tie all of these stocks together. If I can break this formula, if I can figure this out, I'll be able to find these stocks in real time, right? And then I'll be able to profit from the 20 to 30% move, not just see it in hindsight. And I realized that all of these stocks that made really big moves had several things in common. Number one, they all had a similar float. Number two, they all had a catalyst or a technical breakout. And number three, a lot of them were former runners with histories of making big moves in the past. All right, so let's break down these three criteria. Number one, float. How many of you guys know what float is? All right, float is the number of shares available to trade, the number of outstanding shares. All right, and that's a fixed number. It doesn't change on any given day. The number of shares are fixed when the company does its initial public offering, its IPO. Now, after an IPO, a company can do a secondary offering, which will dilute the value of the stock. They're selling more shares onto the open market. Or they can do a share buyback, which is good for the company. That increases the value. And that's something that we don't usually see with the small caps. We saw that with Apple, big companies. But small caps, usually we're seeing secondary offerings. All right. Now, I realize that stocks with a float of under 100 million shares, they have less supply, right? Less shares available to trade. That means when they have strong demand, they can move very, very quickly, like 20 to 30% intraday, maybe even 90% or 100% intraday. All right. Now, the stocks with large floats in excess of 100 million shares, those types of stocks, they don't usually make really big moves. And that makes them safer vehicles for investment, but not as attractive for day trading. Okay. But supply is great. It's important to know, but that's only one side of the equation, right? Supply versus demand. So now we're going to talk about what creates that imbalance between supply and demand. What creates the huge, massive demand that's going to result in these big moves? And that's going to be a catalyst. High demand is the result of a catalyst, which is either a technical breakout on the daily chart, a stock that's been really weak for a long time that's starting to reverse, or a stock that's been consolidating for a long time and is starting to break out, or a catalyst can be breaking news, a PR. Now we're going to focus primarily on stocks with PRs because it's an easier type of catalyst to understand and it's easier to find. Now whenever we have really high demand as the result of a catalyst, we're also going to see high relative volume. You should write that down, high relative volume. High relative volume is a technical indicator and something that we can scan for. All right, I'm going to use my proprietary stock scanners to search the market for stocks that have really high relative volume and a really low float. Then at that point, my job is just to go and try to understand the news. Now you can see these two charts here. This is a stock, RGSC, it's a solar company. This went from $2.26 up to $8. $8 in 2 days. That's an impressive move. Here's a stock, Digital Ally. They make body cameras that police officers wear. They ran up from $3.80 to $33 a share in just 2 weeks. Right? These right here both represent opportunities in the market. This is what day traders love. This is volatility. And on both of these stocks, there are traders who made easily hundreds of thousands of dollars through these moves. All right, so the good news is that there are opportunities like this every single week, really. And we saw 2 of them today, stocks that were moving 50 to 100%. Now, these don't always have the liquidity to take 40 or 50,000 shares, but to get in with 5,000, 10,000, 20,000 is almost always pretty easy, and that can generate some really large percentage gains. Now, when I had that small account, I needed to look for these types of stocks. I couldn't trade stocks like Nike or Apple or IBM. They're too expensive and they don't move enough. I needed to find stocks that were low price that I could afford to buy and that had the potential to make big percentage gains, right? That's how you grow an account. All right, so once you understand the importance of a catalyst, you have to go and actually search through them and find the news. Now, catalysts can be earnings, they can be FDA announcements, they can be news of a big contract. Whatever the news is, we have it in the chat room. So as part of our chat room, we have an API to a news feed that's constantly feeding news right into the room. So traders can log in and they can search a symbol and figure out what the headlines are. What's the news on this stock? But if you don't see it in the chat room, you can also go on MarketWatch, Benzinga, Yahoo Finance, and find the news. So the first step is understanding stocks that are the right type of stock to trade, learning how to find them, and then learning how to research the news and understand what headlines are strong and which ones are going to be a little bit weaker. Now, you can see here former runners. These are stocks that in the past have made those big moves. Both RGSC, the solar company, and DGLY, the camera maker, both of them are now former runners. And anytime those stocks start to spike up, lots of traders jump on them because they think, oh, well, look, last time it spiked up with news, it ran 50%. This time, maybe it will again, and I sure don't want to miss it, so I'm going to jump in. When you spread that kind of collective trading mentality across all the day traders in the world, you're going to get a lot more buying volume. And then, as a result, former runners always seem to be the best ones to trade. Stocks that have had a history of making big moves, we jump in them, lots of other traders do as well, and we get the secondary move. So this is a stock that ran up from $2.76 up to $22. Another one here from $2 to $45. This one from $8 to $30. And this one here from $2 up to $16, $17. These are all big moves that just by themselves offer potential for huge profits. But the fact that now we could look at any one of these stocks and see that in the past they've made a big move, anytime they have news, they're going to be in play immediately. So I actually have a master watch list of these types of stocks. These are stocks that I call my former runners watch list. Now, there are 250 trading days, give or take, in the year. So we may trade a different stock almost every single day, 250 stocks. The good news is there are thousands of stocks that we can choose from, so we can afford to be picky. Now, in a few minutes, I'm going to show you about chart patterns, so you're going to learn to understand the right places to get in these stocks. All right, now building a watch list every single day, this has to be part of your daily process. And it starts for me with going through my gapper scanners. These are scanners that I've written to scan the market for stocks that meet my criteria. That means they have high relative volume and they have a low float. All right, so all of these stocks fit into my one of my strategies. These are scanning for slightly different setups, but these all fit into my strategies in one way or another. So each morning starts for me the same way. I look at the stocks that are gapping up. Those are stocks that are going to open higher than they closed yesterday. And why would a stock open higher than it closed yesterday? It would only happen if there's some type of news that's been released overnight, and that creates some demand, right? And now traders start to bid up these stocks. So we can start by looking for stocks gapping up and then filtering for the ones that have the lowest float and the highest volume, and then we check the catalyst. We go and research what's the news on this particular company. Each day I go through these gap scans, and this is how I build my watch list. I then put the watch list together and I publish it and I email it out to all of our students. So I highlight what I like about the stocks, why I really like this one, why it's an A quality setup. I put the link to the news, and all that sort of thing. So traders who are, maybe on the West Coast, who don't want to wake up as early, they can, check out their iPhone and see my watch list and see what I'm looking at and get a sense of, is today going to be a good day to trade, or is there not much on the watch list today? All right, so in order to start trading the right stocks, you guys can write this down. These are 3 steps that you should take. Number 1, only trade stocks with high relative volume. That means above average volume. And that means that thousands of traders are looking at this stock today. That means when patterns start forming, like bull flags or flat top breakouts, those patterns are going to be well respected, right? Lots of traders are watching them, which means we're going to have better follow through. Number 2, always check to see if a stock has breaking news. And I use MarketWatch, Benzinga, and StockTwits as 3 news sources. Number 3, you always want to ask yourself if a stock is experiencing extremes. That is to say, is this stock having like a once in a lifetime event or a once in a year event? That means it has to be moving up at least 10%. Usually I don't look at stocks until they're up 10%. A stock that's up 3 or 4%, no big deal. 10% is what I look for. I want to see those big percentage movers. Those are the stocks that have the potential to really catch the attention of lots of traders. All right, so now we're going to talk a little bit about chart patterns. Now, some traders believe that you need to have a strong daily chart in order to trade a stock. And I used to believe that, but I've actually found that when you have a really good catalyst, then a bad daily chart doesn't really cause an issue. Right? When you have a company that just came out with the cure for cancer, something like that, a bad daily chart doesn't matter. The stock has great news. It's got such a strong catalyst, it'll override that bad daily chart almost every single time. But with that said, I think the perfect setup does have both a strong intraday chart and a strong daily chart. That means on the daily chart, I like to see the price above the 9 and the 20 moving averages. So whether that's through the result of consolidation and the moving averages have flatlined, or it's the result of just gapping up above those levels, it's important to see the stock priced above that level of resistance. All right. Now, the patterns that we're going to talk about today are just the bull flags. Now, even though I've got a strategy for each one of these patterns, we're only going to have time to review the bull flag. But the good news is this is actually one of my favorite patterns. So the bull flag, one of the reasons this is probably my favorite pattern is because it has the best resolution. It's very easy to see. Lots of traders will recognize it, and lots of traders will buy bull flag pullbacks. So what does it look like? Well, the flag pull is created by the stock squeezing up. So we've got this big squeeze here, the first couple candles, and then we'll have 1, 2, usually 3 to 4 candles of pullback. So we get the move up, and during this push up, the stock should be moving up, should be up at this point 8 to 10% on the day. And we'll see it hitting our high of day scanners. Those high of day scanners are only looking for stocks that are up 5 to 10% and that have high relative volume and that have a low float of under 100 million shares. And we filter stocks knowing the lower the float, the more parabolic and the more explosive the move can be. So if we see a stock with a float of, let's say, 6 million shares or something like that, and it's squeezing up 30%, we know that stock does very likely have potential to go 60 or 70%. Whereas a stock with a float of 78 million shares that's up 8%, well, that might only go to 10 or 15%, may not move as much. So learning to understand and kind of prioritize stocks is also going to be an important step. Now, the entry here is the first candle to make a new high. So that's this green candle here as it breaks the high of this candle. A lot of beginner traders, they just buy into the squeeze when they see these stocks on the high day scanner. They're eager, they want to jump in, so they just buy into the squeeze. Well, they end up stopping out on the pullback, and then, smart traders buy on the pullback and sell into the push. They're selling into the push as beginner traders are buying into the squeeze, and then of course they end up selling on the next pullback. So you can see how seasoned traders with training and with an understanding of risk management are almost always a few steps ahead of those beginner traders. Now, in addition to seeing a candlestick pattern, we also want to see a certain volume pattern. So the volume bars, we want to see high volume on the spiking candle, and then we want to see lighter volume on the pullback. That tells us that in contrast to lots of traders shorting the stock and us having a spike in selling, we're just seeing some nice, gradual pullback, and then the first candle that makes the new high, volume should increase, buyers coming back into the setup, and then squeezing back through high of day. And ideally, we see this increasing volume where we go, squeeze on the first pullback, squeeze on the first move, light volume pullback, even higher volume on the second push, light volume pullback, and even higher volume on the third push. And that's what we sort of see, that increasing volume until it finally peaks at the very top. Now, the previous presenter was talking about how when you have this divergence between price and volume, that can be an indicator of a potential shift in momentum. So when that final squeeze goes up here but is on light volume, that can be an indicator that the trend is getting overdone and we're going to have a reversal. All right. Now, these are some examples of charts that we've traded in the chat room, and we see these setups all the time. This is a candle, squeezing up here, just super solid, volume coming in. We get volume, a little bit of heavy volume on this first pullback, and this is a little bit of a longer pullback, but what I like about it is that we come all the way over to our moving average. First candle to make a new high is our entry, stop is at the low, and we can sell through the push. Now, we see that big volume spike on that candle, and that's what we needed to see. Now, this is a little bit cleaner. Lighter volume on the pullback, and then candle coming in here, spike, squeezing back through the highs. And this is a stock that ran from about $1 to $2. So this is a 100%, nearly 100% intraday move. So it's pretty, it's pretty substantial, and this is an opportunity to profit a good amount of money. Now, this is a 5-minute time frame. Traders who are a little more experienced and are a little more confident will start also trading on the 1 minute. But we trade the 1 minute knowing that this has to be in the context of the 5-minute setup. So we always look back to the 5-minute chart. So this right here is what I'd call a micro pullback. It's just a brief little pullback, and then we get the next leg up. I love these little pullbacks because this is the opportunity to get in a stock really early on. So I often trade 1-minute micro pullbacks to get into a strong stock when it's still squeezing up. And you can see my entry here is highlighted in blue. So my first entry on the 5-minute, if you printed out the 5-minute chart, you'd be like, Ross, why did you buy there? I don't see a pullback. I don't see any reason to buy. But then when you show the 1 minute next to it, it's like, okay, you had a micro pullback. That red candle and then first candle to make a new high. All right. We also have a micro pullback right here. One of the things that we notice is if you miss the first candle to make the new high on the 5-minute, let's say this makes the new high right here, which it did, oftentimes they make the new high and then they pull back just for a moment. They test support and then they bounce off that level. And so this right here is the first 1-minute pullback after a fresh 5-minute breakout. And this allows you to get in here as well. So when you combine the 1-minute chart and the 5-minute chart, you can get entries at places that you wouldn't have been able to find using just the 5-minute. Having said that, the 5-minute is safer. If you're a beginner trader, if you don't have access to hotkeys, if you are still kind of learning the ropes, this is always the safer time frame. But eventually, you'll want to be able to feel comfortable on both. All right, now here's another setup, and it looks so similar. We see this pattern all the time. We saw this pattern today. You can look at some of the stocks today, SEA, EC, GLBS, DCIX. Those are all trades today. that also had these similar patterns. So you can see the flagpole, the couple candles of pullback, right to the 9 moving average, first candle to make a new high, squeezing up. This is the entry right here, so popping up through here, a little bit of pullback, secondary entry on the 1 minute, or holding it through the 5 minute, a little bit of a pullback, first candle to make a new high right here, selling through there, first 5 minute pullback, a second entry opportunity, squeezing through the high, and this is a stock that went from, again, 240 up to 420, nearly 100% intraday. That's a really big move. Here's another one, from 260 squeezing up to 348, a nice squeeze, and check out the volume here. We've got big volume on the push, light volume on the consolidation, consolidating over to our moving average. First candle to make a new high, the volume comes back in, and we start squeezing as we move, back up and through high of day. So a lot of beginner traders, they end up buying into the squeeze, selling at the bottom of these big candle wicks, and right here in this candle wick, if you bought up here at 340, and then you sold down here, you're losing like 40 cents. That's like a 10% loss on this stock, right? And it's because you mistimed your entry. It's so common. All you have to do is step back, look at the time frame, look at the chart setup, wait for the pattern that you're familiar with, and only take your entry there. Now, even if that means you only trade once a day, or maybe three times a week, or 5 times a week, these types of trades can generate so much in profit and percentage gain, you don't need to trade them 5 times a day. Just yesterday, I made over $7,500 trading these kinds of flags. So, that'll tide me over during a period when trading isn't so good or when I don't see as many setups. Now, these two patterns, these almost look like, at first glance, like the same stock. But these are 2 different stocks. And you can see, this is the pattern we see again and again and again. Right? The squeeze up, the pullback, first candle to make a new high. Look at the volume coming in here. This is really high volume on this one. We went from 280 up to 320. So, 15% squeeze right there. This is an opportunity to make 15%. Here we've got a stock from $4 up to 5, pullback, and then first candle to make a new high. The volume comes surging back in. And you can see here again, the squeeze up, the pullback. Squeeze up and pull back. This is a stock that went from $7.50 up to $13 in one day. And look at the safest entries are on the pullbacks to the moving average. Pull back to the moving average. Pull back to the moving average, pull back right here. The volume increasing as we start to squeeze up. First 5-minute pullback, squeezing up. Second 5-minute pullback, squeezing up again. Third pullback, kind of choppy. I usually focus on the first and second ones only. So you can see here, this is a day where I made $4,500 trading the bull flags, buying the first pullback, buying the second pullback. First and second pullback, stop at the low of the previous candle. So how do you find these stocks? You find them with the scanners, right? And then you look in the scanners, you look for the stocks that have low float with high relative volume, then you check the catalyst. Then once the bell rings, you're looking for the first pullback. You only apply the bull flag chart pattern to the right types of stocks, the stocks that have the potential to go parabolic, to make these huge moves. All right, so the focus is trading the best quality setups. Number 1, scan for stocks hitting high of day and then look for the first pullback. That's what you can do to find these setups. Number 2, look for the first and second pullbacks on the 1-minute and the 5-minute time frame, but don't chase it if you missed the first or second pullback. Number 3, you need to trade the obvious setups. All right, if it's obvious to you, it's going to be obvious to thousands of other traders as well, and that means you're going to have better follow-through, more buyers. All right, now when I was getting started trading, one of the things I struggled with was inconsistency, over trading. And I realized I needed to focus on, just like what I said, only trading a few times a day, maybe 2-3 times a day, and taking the best quality setups. I made a rule that I would do that for 1 month. And when I saw the A-quality setups, I would take twice my regular size. And in that month, I made $34,500, right? So those rules work. And you can see here, I exported all of my trades, so again, students could see them. And I backed them up by providing the broker statements to show that those gains were real. That was really $34,000 in profit. Well, following that rule for the next 3 months, I made $94,119, and I was interviewed, and that interview appeared on the Huffington Post. So, over the course of 3 short months, I took a $40,000 trading account and turned it into nearly $150,000 in fully verified gains. So that's the strategy that brings traders to Warrior Trading. They want to understand more about that strategy, and they want to learn to trade it on their own. So, after that month, I ended feeling more confident than ever, and I've been fortunate to be able to have the extra money to do the things that I love doing. And it's because of this one strategy. All right, so I'm not going to push you guys on any sales. I don't like being a salesy type of person. So my feeling is that you guys either like what we're doing or we don't. So I'm just happy that you guys are all here and hopefully enjoyed this webinar. Now, if you did enjoy what I was talking about, I'd love to have you check out our YouTube channel. You can go over to youtube.com/user/daytradewarrior, and I'll paste in the link here so you guys can see that, or maybe Renee will post that. If you'd like to download a PDF copy of my best-selling book, we'd love to have you do that. You can go to warriortrading.com/register. Or if you have any questions, you can also email me, ross@warriortrading.com. All right, so if you feel like we're a good fit and you want to join us and check us out, we'd love to have you. If not, it's no big deal either way. Right now we've got just under 3,000 members in our chat room on pretty much every trading day. So we've got a great community over at Warrior Trading, and our focus is just trading these setups every single day. So if there is a stock that's low float with a catalyst that's forming a bull flag, we're going to be looking at it and we'll be calling it out for everyone to see. All right, guys, so any questions? Give you guys a chance to ask questions if you do have any. Let's see. I see this little teeny question bar, but I'm not sure if that's really what I'm supposed to look at here. Oh, the time frame for the moving averages. I use the 9 and the 20. All right, so those are the two that I'm using. And high relative volume, you should be able to find that on Thinkorswim, but you can definitely find it in trade ideas. And I'll back up here. You can see these are my trade idea scanners that I'm using. All right. So yeah, you can follow me on Twitter @DayTradeWarrior. And for those of you who want to learn more, check us out on YouTube. Come over, check out our website, attend one of the webinars that we're hosting. We'd love to have you. And if you have questions, you can always email me, ross@warriortrading.com. So I want to thank Renee for having us here today, and all of you guys for being here and hanging out with us.